You gotta be flipping my flapjacks. E.l.f. Beauty, my #1 stock ever on a percentage return basis, up 2,438% now, was up massively here today. We're up over $29,000 on this stock. I put $7,200 into this stock years ago. So we made about a 4x the initial investment just today. We're gonna dive into the E.l.f. numbers in this video. I'm also gonna let you know why E.l.f.'s likely headed to the $200 to $250 range this year. Not 3 years from now, 5 years from now, 10 years from now, this year, okay? We'll dive into those numbers. Jensen Huang, the master at Nvidia, had an absolutely monumental statement he made today in regards to Tesla. Nvidia stock had an amazing day here today, up over 9 percentage points. We were up about $2,900 in the public count on the Nvidia stake there. Tesla honestly should have been up 5 to 10% on the words that Jensen said here today. It mattered significantly, and I'll run you through that in this video. So that's the second subject we'll speak about. And the third subject we're going to speak about in today's video is the Dow. The Dow's lost about 1,000 points just in the past 4 trading days. Now, is there something bigger going on here? Is this just normal market activity? My personal opinion is there's something bigger going on, something much scarier, and I'm going to take you through that in this video here today, okay? So 3 core subjects to cover here today. I appreciate everybody joining me as always. All I ask in return, folks, it takes less than 3 seconds for you to do this. Hit the like button on this video and make sure you're subscribed here to the channel. That's it. That's all I ask in return. I post these videos for you guys almost daily, very valuable videos. That's all I ask from you in return. If you need help understanding income statements, balance sheets, cash flows, if you need help understanding how to build a portfolio, if you need help understanding if you're getting ripped off on a stock, if you're getting a great deal on a stock, identifying business models, check out the pinned comment down there. Click on that, fill out an application, join my private group. You get access to all my best course curriculums, teaching you everything I know up here in my head that is slowly growing its hair back, right? You also get access to our Discord chat with myself and hundreds of folks that are in the 6-figure and 7-figure Club Hall of Fame, okay? Alrighty, guys, so E.l.f. Beauty, let's dive into this. Holy smokers, this is no dang jokers. Check this out. They just finished up their fiscal year 2024. Net sales up 77%. Gross margin up 330 basis points, which is a fancy way of saying 3.3 percentage points. Adjusted EBITDA was up over 101%. In market share, they gained over 305 basis points of market share. They are eating everybody's lunch in this cosmetics industry, okay? Check out the consecutive sales growth. 21 consecutive quarters of net sales growth. I mean, recently they've been growing the business 70+%. Just a shocking number overall. Cosmetics consumption's up 30% for them versus the category's actually down. That's incredible when they've got 30% growth and the category itself is down, right? They're growing market share. If you look at their competitors, which, you know, companies like Maybelline, L'Oreal, CoverGirl, Revlon, right? These ones are actually losing dollar share, right? And E.l.f. is gaining massive dollar share overall. If we look at the skincare, because you got to understand there's cosmetics, which, you know, might be eyeliner, it might be, you know, foundation, lipstick, things like that. But then there's skincare, which is like if you have a skincare routine, you know what I'm talking about, right? It's making sure your skin's always fresh and using different products in that frame. It's not really about like, let's put eyeliner on and those sorts of things, right? Let's put mascara on. That's not what skincare is, okay? So skincare segment, they about 19x the skincare consumption versus the category, okay? So which means, once again, they're outgrowing everybody else by a large margin. They're taking major market share. If you look over here, as far as the share gain, they gained about 45 basis points here, and they're up to number 11 brand in skin. And so they have a long way to run here in the skin category overall. They bought this company out. They paid $300 million plus for it. The deal closed back in October. Natrium, okay, and this brand is very, very successful in skincare. It helped the company out 17 percentage points when it comes to net sales growth as well, and this one has a long runway of growth ahead of it. It's going to be very substantial for E.l.f.'s business model in the future. Now, international sales are off the charts for E.l.f. Look at this. Look at this. Who's putting up these sorts of numbers, right? This is what frustrates me a little bit about the stock market. People, you know, they're like, oh, you know, I don't wear makeup, so it's not relevant to me. I'm like, the numbers can kind of show you what's going on here, man. I think it might be worth paying attention to a little bit at least, right? International net sales growth up 115%. Booming. booming international sales growth, right? In Canada, they're up to number 3 in market share, and in the UK, they're up to number 4 now at this point in time. And when I look at e.l.f., it's just a matter of time before they come to the number 1 position in all these different markets, okay? Number 1 in all of them. Now, if you look at their pricing versus their competitors, they brought this out here, $650, versus $950 versus $20 roughly or more for prestige brands. Here's the deal. e.l.f. is good in any environment. Throw a recession at e.l.f., they'll handle it. Throw high inflation at e.l.f., they'll handle it. Throw deflation at e.l.f. and they'll handle it. And the reason being is because they undercut their competition as far as pricing goes, and by not a small amount, by quite considerable amount of money, right? And so whatever happens. You got to understand, if their other competitors are losing market share, well, likely they might have to go up on price. If they drop price, plus they're still losing market share, then that could just cause their margins to completely fall apart and their whole business model to completely fall apart. So their competitors are kind of stuck trying to charge the same price or even a higher price as they lose market share overall. They can't really compete like that where they're like, let's bring down price. So e.l.f. is good in any environment. That's one of my theses many years ago when I invested in the stock for the first time, was that they could handle any environment out there, which they've proven they can do that, right? Unit volume growth. Look at this, 33% unit volume growth versus negative 7% for L'Oreal, negative 7% for Maybelline, negative 6% for CoverGirl, negative 9% for Revlon. Insane. If we look at the skincare market share gain just in the past few years, they've 3x'd that. 3x their market share, but they're only 1.6% of the market, so they've got a long runway of growth ahead in the skincare category, right? If you look at e.l.f. dollar share for color cosmetics, they're at about 10.5%. I think that's where they're going to probably go with skincare over the coming, next 5-10 years, is somewhere around that 10% type share. So long runway of growth ahead in the skincare category, like absolutely crazy. This is still a baby business for them overall. No, this goes ahead. This is a teen survey that Piper Sandler does, okay? And they survey teens and kind of ask them what their favorite brands are in specific categories and whatnot. And what they found when they asked teenagers what their favorite cosmetics-related brand was, e.l.f. destroyed everybody. They got about 38%, which is up 16 percentage points versus last year. The next closest was this company named Rare Beauty, 9%, Maybelline at 6%, Charlotte Tilbury at 5%, and Fenty Beauty, which is, if I recall, is a Rihanna company, 4%. So they're destroying their competition. They're what teens want at the end of the day when it comes to cosmetics overall, which guess who the future customers are of e.l.f. for the next 10, 20, 30 years. It's these folks that are teenagers now, and then they're in their 20s and 30s and 40s, right? And so e.l.f.'s snagging a lot of these folks when they're very young. Speaking about very young here, this was a survey they did, number 2 most purchased by millennials in terms of e.l.f. So they've really done a great job of capturing the millennial generation. But look at this, Gen Alpha, which is still wild to me that Gen Alpha even buys any sort of beauty products or cosmetics, but they do, which is Gen Alpha is like 6 to 11-year-olds. And who did they even survey for this? Like, this is another company that does this sort of survey, but I'm like, they must have to talk to the parents. They're not talking to 8-year-olds, are they? But number 1 most purchased by Gen Alpha overall, which I know this all sounds silly, but at the end of the day, like, who do you think is going to buy these products 10 years from now, 20 years from now, 15 years from now, right? It's going to be the younger generation. If they like the brand now, there's a good probability they'll like the brand in years to come as long as they continue to do a good job of marketing, which, speaking about marketing, the company's upped their marketing investment considerably. They're basically, this past fiscal year, they're basically using about 25% of their net sales on marketing, okay? Which is a huge number. I mean, an absolutely huge number. So they're doing major spend here. Now, they could just cut this number down significantly and cut it down to where it used to be at 7%, 13%, 16%, and that would help the profitability of the company go up immensely. But if you're e.l.f., why would you want to do that right now? You're growing revenue and market share at an absolutely astonishing pace. You're setting yourself to be the number 1 cosmetics beauty-related company in the world. Let that sink in for a moment. In the world, number 1. That's what they're setting themselves up for. When you look at e.l.f.'s market share gains, and you look at where this company's revenues are headed in the brand, you can see how this will be the number 1 cosmetics beauty-related company in the world by the end of this decade. And when you look at it from that context, it's like, maybe we should hurt our profitability in the short term and spend on marketing because, dang it, I think it's pretty darn valuable to be the number one beauty brand in the world by the end of this decade. And that's the path that e.l.f. is on over here. It's a whole different game plan. So to be quite honest, although I love profit and I love the net income and I love that earnings per share, for e.l.f., they need to focus on marketing, because what they're doing is working, and what they're building here is the number one cosmetics beauty related company in the world. And so keep spending that money. Now, they've got some big things coming up here. In the springtime, they're going to be getting shelf space expansion into CVS, and then they're getting more shelf expansion in CVS in fall 2024. Anybody that's not from America, you might not know CVS. Anybody that lives in America, you know CVS because they're practically on every other corner. Them and Walgreens are the two most famous pharmacy chains in the world, right? Well, I don't want to say in the world, but certainly in the United States of America. Then Walmart. They're getting space expansion in Walmart. Now, this is huge because if I look at the one store that here's the deal. e.l.f. doesn't have enough shelf space in any store right now. They're way over indexing. So basically, e.l.f. has like 5-10 years of runway ahead just in terms of shelf space gains in all the stores, even Target, which if you go into a Target and look at the shelf space that e.l.f. has, it's massive. It's still not even remotely close to what they should have, given how much volume they do from their section versus these other companies. So e.l.f. even in Target should be gaining more and more shelf space over the coming years, which is crazy because they're like the big dog already in there. But Walmart, their sections in Walmart are so small from what they should be. Their sections in these Walmart stores should be somewhat comparable to at least where Target's at today. When you think about the price points and the brand, it's perfect. Like they should have the biggest section in Walmart, no doubt about it, right? So this is a huge, huge thing for the company overall. Now, also that new brand, they bought the Natrium, I can never pronounce it correctly. They're expanding into Ulta this summer as well. So they got e.l.f. expanding shelf space in Walmart this summer. And then on top of that, this new brand they bought is expanding into Ulta, and that's big. Like Ulta, that's the holy grail in terms of trying to get skincare products into Ulta Beauty. So massive for the company overall. Now, international. There's so many growth levers all over this company, it's hard to even fathom, okay? International is about 15% of the company right now. International penetration, 15%. Their major public peers are around 70% or so. That's where e.l.f.'s going long term. So this is going to flip over this next 10 to 15 years. It just makes sense. There's way more people to buy cosmetics products outside of the United States of America than inside the United States of America. Why? Well, there's a lot more people that live outside the United States of America versus inside the United States of America. And because e.l.f. is so successful on social media, it makes it very easy for them to expand in new markets because they already got their customer base there. Because guess what? TikTok's used around the world. Instagram's used around the world. All these different social medias, YouTube and whatnot, right? And guess what? People are already familiar with e.l.f.'s brand in other countries before they even have a big presence in that country. So the international expansion over this next 5-7 years is cake. It's cake for e.l.f., okay? And there will be a day when international is making up 50% plus of their business, right? And it's not in too far of a future because that is just... And also do the math, right? It's compounding numbers, right? You look at that international growth rates, 115%. Nice. They have just an extraordinary opportunity international over the coming years, right? Now, if you look at adjusted net income, $31 million it did in this latest fiscal year quarter versus $24 million, same quarter last year. And if you look at most recent EPS, it's growth, but that's not the focus of the company. They're focusing on marketing, employee force, expansion, costly things, right? But there will be a day when e.l.f. on a shelf is an absolutely ridiculous net income maker, earnings per share maker. It's not today. That day will come, but right now it's all about revenue and it's about market share because you're going after much bigger opportunity here, okay? Now, as far as the fiscal year 2025 outlook, if you're wondering why did the stock go to the 130s after hours yesterday, right? And then all of a sudden, next thing you know, it's 180s here. The reason it went to the 130s after hours yesterday is because the initial outlook came out. And the company was talking about 20 to 22 net sales growth, right? Whereas a company's been recently doing like 70% plus, right? And so the algos all freaked out. All these Wall Streeters freaked out. They sold off the stock, right? And if you were watching the live stream, what did I tell you yesterday on Twitch? I said, this is a clown show. They're going to buy this stock right back up. They don't realize what's going on here. E.l.f. always comes out with low guidance, and then guess what ends up happening? They come throughout the quarter and beat numbers and beat numbers and beat numbers and beat numbers. And I said, these same clowns that are selling off this stock are the same ones that are buying it back tomorrow and next week and next month and paying $150 a share and $200 a share. And sure enough, it's exactly what played out, right? They didn't understand, like, E.l.f. did the same thing last year. They put out a low guidance, and then they came in, crushed numbers. Then they came in, crushed numbers again. They upped their guidance for the year, right? And I think they actually upped their guidance multiple times throughout the year. What do you think is going to happen this year? The same flipping flapjacking thing. Come on, man. Geez, that's insane. And a lot of people got to make a lot of money off that fall after hours yesterday. A lot of people that had after hours trading enabled, because that was just the biggest gift to folks out there. Unfortunately, I was on live stream, so I couldn't really make any moves. But man, people that were watching that live stream, some people were looking at that price and like, this is a joke. And so like this guy in the private group, he bought at 137, ended up selling at 153. Probably should have held it for the day, but hey, that's his move. He still made a bunch of money. He bought 250 shares. That's a sweet profit, and he probably made that profit in an hour or so? Like, that's insane, right? This person, they bought during that after hours trading, they're already up 30% in the private group. I added 10 shares when it dropped to 138. I wish I added more. You and everybody else. Somebody bought a call option, and they already got a double up on that, right? I mean, that was insane. That drop yesterday was like the biggest gift. And congrats to all the people, because there was a lot of folks that were watching that live stream and ended up, being like, this is a little silly. Like, we're going to go ahead and buy some shares. And you can say, okay, well, what if the stock fell though? What if it kept falling and it was like 120, 110? Dude, like, that would have been the best gift to everybody, because then you just dollar cost average into one of the best companies literally in the entire stock market. Like that would have been even better case scenario. But people got to make a lot of money very, very quickly. Like, the returns were ridiculous. So congrats to everybody that made some insane profits on that. Now, in terms of E.l.f.'s income statement, right, I give them a C overall. Obviously, net sales growth is insane. Cost of sales up significantly, but up way less in net sales. So the gross profit's up to $227 million in its latest quarter versus $129 the same quarter last year. Selling general administrative expenses up a massive amount, almost $100 million year over year. They're expanding the business, right? Operating income up quite significantly, but not up nearly as much because SG&A is up so much. Interest expense was up for the company as well. So overall, I gave them a C, but if you look at it from a longer-term perspective, this is exactly what they should be doing with the business. Like, they could have made this an A income statement, just don't spend on the marketing like you're going to spend in SG&A, but would that have been a smart long-term decision? No, okay? Now, why do I say the stock's going to 200 to 250? Okay. And why do I say it's going likely this year? Outside of a stock market crash or something like that, right? All bets are off if you have a stock market crash. But outside of that, why is their stock going to 200 to 250? Well, let's think about this logically for a moment. They beat 13 out of 13 of the last quarters when it comes to earnings per share. As far as revenue goes, 13 out of the last 13 quarters, they beat on revenue. And to be honest, they beat considerably. And their beats have even gotten more impressive really in the last year and a half in regards to earnings per share and revenue. So what do you think is going to likely happen in this situation? They got all this shelf space expansion coming in CVS, coming in Walmart. They continue to get more and more consumption growth, right? Younger and younger generation buying their products. The international growth is insane, right? They've got more skincare products, including the new brand they bought, expanding into Ulta. Like, just do the math, and you're going to find they're likely going to come in and crush their numbers throughout the year, which means at this time next year, we'll likely be looking at an E.l.f. that beat 17 of the 17 last quarters when it comes to earnings per share in revenue. At some point in time, E.l.f. is going to miss on earnings per share and revenue, but I can tell you it's likely not anytime soon in regards to this. They're likely going to continue to come in and beat numbers and beat numbers. So that's the first reason, right? It's going to continue this upward momentum of just positivity and beats and just, being able to be confident in this company. But then on top of that, I was watching Fast Money while I was preparing this video. And what do you know? All of a sudden I hear out of my left ear while I'm laying on the couch and prepping this, oh, they're talking about E.l.f. Beauty stock. Oh, isn't that beautiful on fast money? Wow. E.l.f. Beauty is starting to get some respect even on fast money, even on CNBC. And so there's a lot of Wall Streeters that are starting to wake up to the E.l.f. Beauty story. And you've got to be honest, okay? You can't find that much growth out there in the stock market for that many companies. You're not going to find that many companies growing at these sorts of growth rates, right? There's Nvidia. Everybody and their grandma knows about that one, okay? Now, find me other companies growing revenue 50% plus. I'll wait, and I'll wait. You probably didn't think of any. You probably try to think of some, you're like, hey, no, they don't, no, they don't, no, they don't. So, if you want insane growth, there's almost nowhere to go in this market. And especially if you want insane growth but profitable, that's a whole other story. Insane growth and profitable with an easy to understand business model. Like, this isn't like they're selling cosmetics products and skincare products. This isn't like the most, like, I can't understand how this business model works. Like, it's very simple. You can't find these opportunities anywhere. So as more and more Wall Streeters get educated on this company, more and more Wall Streeters will buy into this stock because you're not going to get that sort of opportunity and growth rates really anywhere else. It's just, it's either that or it's like Nvidia. It's like, where do you want to go, right? Now, if you look at the big dog in the space, Estee Lauder, they've always been a dominant company in this space. They've fallen on really hard times over the last couple of years now at this point in time because their products are very high priced and they really go after like an older demographic, and they've been not doing the best with their business. Plus, inflation hit a lot of their customers, and people are tighter on money, so they're not as more likely to splurge on $100 plus products, which is a lot of Estee Lauder products, right? And so Estee Lauder's market cap is down to $45 billion. E.l.f.'s market cap's $10 billion. E.l.f.'s going to where Estee Lauder's at. Like, it's very clear, as long as E.l.f. keeps a pedal to the metal and they keep these numbers headed in the right direction, revenue, and then obviously profitability will matter a lot more years from now, right? Margins continue to increase, market share continue to increase, right? And they got plenty of room to go up on pricing here or there to continue to take up margin over the coming years. It's very clear to me where E.l.f. is headed over this next 7 to 10 years. It's headed to like a $40 billion plus market cap. It's headed to be the big giant. I think it's a high probability at this point in time that in 7 years from now, 10 years from now, we're going to look and we're going to say the beauty giant is E.l.f. And then you'll consider all other companies after that. It's very clear to me at this point in time, right? So a little food for thought in regards to that one, and that's why the short-term story is very attractive in E.l.f., and then the long-term story is insanely attractive for E.l.f., right? Now, this leads me on my next big point before we get into what Jensen said about Tesla, which is huge, and what the Dow is going on there and why that matters, okay? Last point I want to make in regards to this E.l.f. situation, right? If I think about my two biggest public failures as far as stocks I own that, I talked about a lot on the channel, and I had to sell for big losses and very embarrassing. I think about GoPro and I think about the Chef, right? Two very embarrassing situations, lost over 50% on GoPro, lost over 90% on the Chef. Super embarrassing. Why are they embarrassing? Well, everybody expects me to get it right, right? People don't expect me to ever lose a lot of money like that, and I lost a lot. And so, embarrassing. But at the end of the day, remember those losses, right? And remember how much you can gain in a stock. You could literally own a company to bankruptcy, lose 100% of your money, right? But the best part is, when it comes to owning a great asset, you can make unlimited percent. So right now, E.l.f.'s on a 2,400% gain. It's very possible that not too distant future, that's at a 4,000% gain, 6,000%, 8,000%, right? Versus the most you can lose is 100% on a stock. Meta's at a 292% gain. Tesla's at a 531% gain, right? Now, as obviously your wealth grows over time, your investment sizing should get bigger and bigger and bigger, right? So E.l.f., I wish it was a lot bigger position, but back when I was buying E.l.f., my net worth was not nearly as high, right? So you got to understand, some of these companies I might be buying today, the percentage gains, I don't know if they'll be as great as E.l.f., but the dollar amounts will be, really, really substantial amounts of money because I'm able to put more in stocks nowadays than I might have been 5-10 years ago, right? So a little food for thought in regards to that, and that's one of the things that make individual stock picking so dang beautiful. When you own the best of the best, and you own these great companies, and they're able to produce for you, Oh man, it's a lot of fun. It's a lot of fun. No, new interview happened today with Jensen, right? And he made a major statement. I mean, absolutely a major statement in regards to Tesla. Here's his exact quote, and this matters. Jensen says Tesla is far ahead in self-driving cars. Far ahead in self-driving cars. That is his specific quote. You go watch the video. Elon Musk even reposted it. Tesla is far ahead in self-driving cars. He could have said Tesla is doing self-driving cars. Tesla's doing a good job. He could have said Tesla is ahead in self-driving cars. He said Tesla is far ahead in self-driving cars. That's his specific quote, right? Now, here's the deal, okay? You hear these Wall Streeters sometimes talk and they say, oh, Tesla's not ahead of the competition. Oh, they're behind. They're not doing this. They're not doing that. They don't have the right approach, blah, blah, blah. And that's what we hear from a lot of these Wall Streeters. These are some of the bearish points they point out. Meanwhile, you have a super genius who's leading a $2.55 trillion company that's likely on its way to becoming the biggest company in the world as far as market cap goes, right? Who started this business from a Denny's, and you have analysts, the frat boys, who make $100,000, $120,000 a year base salary. Who do you think knows more about artificial intelligence, about self-driving vehicles, and technology in general? The frat boys, the party boys, making $120 grand a year base salary, or the super genius running a nearly $3 trillion company? The super genius that all the super geniuses look up to, like Zuckerberg, like Musk, like all these guys, Satya Nadella, they all look to Jensen. And they all say, that man's a super genius. I wonder who knows more, right? So when Jensen comes out and he says Tesla's far ahead in self-driving cars, I would maybe take him a little serious. I would maybe think, you know what? Damn, maybe Tesla is ahead on this stuff. I've been telling you guys they're ahead for years now. And, people choose not to believe it. You choose. You with the frat boys or you with the super genius? You with an expert in this industry, a beyond an expert? You with the guy who's making the industry, or are you with the frat boys? It's up to you. You choose. You choose. Dow Jones Industrial Average has lost about 1,000 points in 4 days, right? Now, why? Is there something bigger going on here? Is this just normal market activity? I think there's something bigger going on here, okay? I really do. I think this is more than just market fluctuations here in the Dow recently, okay? Here's what we're dealing with. We're dealing with a Michigan consumer sentiment that has all of a sudden suddenly dropped off a cliff. We know that, right? Those numbers came out. It was bad. It was bad. And I don't know if I see that fixing itself in the short term. I don't know if I see that it's fixing itself in the short term. There might be a trend that even gets worse over the coming months, right? Now, I typed in economy. I was just trying to see some news in regards to the economy, if there had been anything. And, I type in economy into Google News, and all this Biden stuff comes up. Majority of Americans wrongly believe U.S. is in recession, and most blame Biden. Okay? Why Joe Biden isn't getting credit for the economy? I mean, it's just like crazy. I'm just like, why are they bringing it's just wild to me, right? Now, in regards to the economy, most people don't understand the Fed, interest rates and a lot of these more complicated subjects. So they always are going to blame whatever's going on really in the United States in general on whoever's a president in charge, right? But I'm looking at these kind of like fluff pieces here, and I'm like, I got to call it the way I see it. Not the way I see it. I got to call it stats. I got to call it based on data, right? Here's the deal, okay? Since Biden got in office, look at real wages. Real wages have gone down. So if you're wondering why the masses are not happy, and once again, you can never blame everything on just a president, but at the end of the day, Americans are going to look at the president. If the economy's doing good, they're going to say, president's doing good. If the economy's doing bad, they're going to say the president, this is his fault, right? At the end of the day, you're wondering why people aren't feeling great about the economy. It's because real wages have gone down since B-Man got in office, right? So that's why. People have been sliced and diced by inflation for 3 years. People hadn't really dealt with inflation really since like the 1970s. We had the most extreme inflation we've dealt with since the 1970s. And it happened under B-Man's watch, right? So when you have people get sliced and diced by inflation for 3 years, and you've been in office for 3 years, and real wages have gone down during your presidency, I'm just sorry, but people aren't going to look and be like, we're happy with this guy in office. Like, that's just like facts. Like, I don't know what other way to put it, right? Now, in terms of the small business optimism index, it's brutal. It's brutal. It's fallen off a cliff. Small businesses are doing horrible. They feel like they're doing horrible, right? And, I know several people that run small businesses. It's tough. I know a guy that runs a couple breakfast spots here in Vegas, and man, used to pull in like 10K profit a month. And now, some months losing money. Some months breaking even now at this point in time, right? Small business has not been in a good spot for the last few years. It's really sliced and diced them hard as far as inflation goes, right? So we're in a moment where only the strong survive when it comes to small businesses. There's going to be a lot more small businesses that go under. In regards to the situation, only the best of the best companies will make it through. And so a period like what we're going through right now, pay very close attention to the companies that are growing. Listen, we got some of the biggest companies and most famous companies in the world. Their numbers are going negative. Starbucks, FedEx, UPS, right? Big airline companies. Industry by industry, you go through these companies, their numbers are literally going negative. Revenue's going negative. Earnings per share is going negative, right? It's going down for these companies. Pay very close attention to the companies that during this time period are growing revenue and are growing earnings per share. Because if you can grow your revenue and grow your earnings per share, especially if you can do it at a double-digit clip, in this sort of environment, you can do it in any environment. That's the bottom line with that. Only the strong survive in this situation, because I'm telling you, it's not pretty. So when I see the Dow moving down like that, I'm like, I can kind of see it, right? Now, if you look at the Fed funds rate, I'm here to tell you guys there's more damage coming. Because whenever they start to lower interest rates, which there's an argument, maybe they start lowering 3 months from now, 6 months from now. They're likely going to do it slow unless the economy's already fallen off a cliff. So it's almost a guarantee that interest rates are going to be high for at least the next 6 to 12 months. It's almost a guarantee at this point in time, right? And so that's going to continue to just put a huge weight on the economy that's very negative for at least the next 6 to 12 months. So if you think right now is tough, just understand it's likely, high probability it's going to get tougher for small businesses over this next 6 to 12 months, right? And at some point in time, the Fed will have to likely lower interest rates down to zero again or something pretty dang close. And then at that point, I think optimism can start coming back to life, but that's a process we have to work through, right? And so just understand it can get worse before it gets better, but that doesn't mean there's not opportunities, right? If you look at the public count, you would think the economy's in boom times. Look at the public count and you're like, this is like the greatest economy ever. It's not. It's not at all. The fact is, if you own some of the best companies, it is boom times, right? Meta, PayPal, maybe not so much, okay? Maybe someday PayPal's going to be great. Amazon, E.l.f, Palantir, Revolve, Cheesecake, right? I own many of the greatest companies in the world. These companies execute year in, year out, regardless of whatever market conditions are put in front of them, right? And so when you own the best of the best, these companies are going to thrive in basically any environment, right? And that's what these companies have basically been doing. And so you got to understand, just because like my portfolio has been doing good, maybe you own a portfolio of stocks and they've been doing really good, don't let that confuse you by thinking it's a great economy. Because I showed you, like, you can't say it's a great economy when over the past 3 years, real wages have gone down. That's not a great economy. I'm sorry. When people have been sliced and diced by inflation for the last 3 years, that's not ideal. It's a weaker consumer. When small business optimism is by far and away the lowest we've seen it in a long, long time for the past year or two, no bueno when it comes to that, right? And so, you got to make sure you know what you're doing in the market, because if you're in the wrong stocks, if you're in the wrong positions, you haven't been making any money in the past year or two. You're probably in bad stocks, right, that are losing money. And there's a lot of them out there. If you've been positioned in Starbucks and some of these other stocks, you feel the economy is not very good, right? If you own Meta, you feel very differently. If you own Amazon, you feel very differently. If you own E.l.f, you feel very differently. If you own Palantir stock, you feel like it's boom times. But the reality is, it's just those companies are special. Special. Cheesecake Factory, special company. Arguably the best restaurant run chain in the world, right? Like, they're going to put up their numbers regardless. Inflation, recession, right? The average mom and pop restaurant can't compete with them. They're a whole different category, okay? So that's an important thing to understand. So if you need help understanding this stuff to actually build a great portfolio, the best of the best that can weather these storms and get through things, apply to join my private group. That's going to teach you everything you want to know. Everything you want to know about this stuff so you can position yourself well and you don't end up in, let's just call it, making a lot of mistakes in the market, overpaying for stocks, not understanding business models, not understanding the financials behind these companies. Very, very important. There's a reason we've had so many people go through the program over time and have such success, right? That's why we got the 6-Figure Club Award. When you hit 6 figures plus in your portfolio, we send you over this diamond award right here to your house. And then when you hit 7 figures plus, we send you this beast right here. There's a reason we've had that many people. I mean, it's a tremendous amount, reach a lot of big numbers. I need to start an 8-figure club as well, because we definitely got some of those folks in there as well. So anyways, guys, pin comment down there. Much love and have a great day.